Wall Street was generally in a good mood as Black Friday died, and now we have Blasé Friday. Stocks posted marginal new highs in thin trading and were mostly consolidating their gains after the Dow Jones Industrial Average hit 30,000 for the first time earlier this week. Good news continued to be encouraging expectations a vaccine will be rolled out by early next year, if not sooner. According to Goldman Sachs, while the exact timeline remains quite uncertain, this analysis reinforces our baseline forecast that widespread immunization should drive a sharp pickup in global growth starting in the second quarter. As another indication of the good mood, the CBOE Volatility Index, or the fear gauge, the VIX, briefly dipped below 20 on Friday, its lowest level in 9 months. In other news, the S&P 500, the Nasdaq, and the Russell 2000 indexes also set fresh historic highs, while the major U.S. equity indices are on track for their best month since 1987. In other news, Tesla surpassed Berkshire Hathaway in market cap for the first time ever. So, let's now take a look at the charts. And looking at this chart here, the Fear and Greed Current Index, we find there is greed, greedier, and greediest. But remember, it never ends well. It didn't last time, and it won't the next time. And while looking at this chart, do me a favor. If you hear one more pundit complain that the stock market is dislocated and is not reflecting the economic conditions of Main Street, just tell them that it's the liquidity, stupid. And now, let's take a look at our charts. And today we're going to look at one chart, the 6-month daily on the spiders, the SPY, and then close on Friday was 363.67. Now, not much has changed since last week when we talked about the channel. This is the bottom line here, moving on up, and then the top line through here, moving on up. Now, I don't draw straight lines, but you get the idea. And you can kind of forget about this area here. It's not important. What's important are the reflections there, perhaps there, and we're right up against that upper channel line right now. We might move along this for a while, but I think it's getting a bit tired. Now, last week we were up here. We talked about a reflection coming on down here. I thought that the odds the market was going to continue on down, but I did tell you that there is a possibility of that reflection at this point here. As you can see in the MAC, there was enough distance between the fast line and the slow line here and here that that reflection was possible, and that's what we got. But as you can see here, the fast line is much closer to the slow line. Now they're riding in parallel, and that can go on for a while, but I do think that things are starting to deteriorate. Now, back here, you can see we had a reflection at this point here and another reflection here. It did continue for, just over a month or so before it finally gave up. I think that there is the possibility this continues sliding on up with the fast line and slow line moving in parallel. But again, I do think things are starting to deteriorate. Back up here to the volume, you can see that the volume kind of came down here. Perhaps that's because of the holiday week. But at the same time, I think things are starting to erode a bit. And there's nothing wrong with that. You can see here we had this top and that top there. This slid pretty quickly. This came down here. We have the reflection, but I think we'll slide perhaps there soon enough, maybe next week or so. I think that's the probability. But again, looking at that MAC, there's also the probability that we can continue heading on up here, maybe above this level of 6. So I think it's 50-50 that we move down versus we continue on up. Well, that's not going to help you much, but I think either way, I don't see a problem with the market heading on down. and I don't see the problem with the market heading on up. Either way, I think we're going to stay within this channel for a while. We'll have to break through that. Once we break through that, then we have a different game. But until then, I think that we just continue on. Moving down here, we do see that the price rate of change has come through here pretty solidly. And I think that is maybe one indication that the market is going to break down like it did there, perhaps like it did here. So maybe it does come on down. Moving here, you can see in the relative strength that these levels here were higher than the current level. Again, that's telling me that there's a slight deterioration in the market. Moving on here, stochastics gives us a slightly different measure. Things continue on up in that overbought territory, but I think perhaps like this, we are going to see a topping process and a move heading back down soon enough, but just be patient. It'll happen. Here into the Williams, not going to really show you much except that it is up here in this overbought territory, and pretty strongly so. It's only at a negative 3.94 measure. That's pretty good. Now, moving back up here to the price chart, one last look here. This channel can continue for a while. It's not quite in a melt-up territory, but that is also a possibility the closer we get to the end of the year with any Santa Claus rally. But until we say break up through this, or the MAC shows that we're going to continue to head in that parallel move, we need more time to actually tell us if we're in a melt up. Right now, I don't think so. So right now, we're at the top level of that channel, and I think we'll get turned away soon enough. We might ride this for a short while. We might even pop above it for a short while. But soon enough, we're going to turn back down again. I think we talked about the VIX in the opening. The VIX got crushed below 20, but it's back above 20. And it's still in that level above 15 that makes me uncomfortable. So continue to be patient and prudent. And for today, that's ChewDog Charts. Thank you.